Hello, everyone, and thank you once again for joining us here on El Poder Latino in Vivo. Joining me in studio is Jen Profeta from the M&T Bank, and she'd like to talk a little bit about credit and the SBA. Thank you, Jen, for joining us. What do you have for us today?
Thank you so much, Johnny, for having me.
Sure.
Today, I just want to talk to you about how credit plays a role in securing SBA financing and why understanding both your personal and business credit is so important as an entrepreneur. For many new businesses, your personal credit is really like the foundation that sets the stone for moving forward and establishing your business and getting started. So over time, building a strong business credit will give you more independence, a better opportunity for expansion and growth. And so my goal today is just to share some practical tips about credit, how to strengthen the credit and in relation to SBA lending and how that can help be a powerful tool to grow the business.
Well, that sounds awesome. Thank you for joining me once again. Let's start with what exactly is credit or credit score and why is it so important?
Yeah, it's a really good question. And, a credit score is essentially, it's a 3-digit number that tells a lender how likely you are to repay back debt. But it's kind of like your financial reputation, so to speak. So it shows the banks and lenders how you've handled money in the past, how you can pay your bills on time, how much debt you might have, and then how responsible you are with borrowing.
Yeah.
So, having a good credit score makes it easier to rent an apartment, buy a car, get a mortgage, or even, essentially starting your own business one day.
Sure. And how can someone start a building credit if they don't have any history just yet?
Yeah. So the good thing is you can always start building credit with no history, right? So the few ways that you would do that, you can typically apply for what's called a secured credit card. And a secured credit card is something that you would put your own funds down as essentially like a deposit. And the bank or credit union can, lock those funds up. So those funds are not available to use. But then in return, they give you a plastic credit card to which you could spend, pay down, and make your, payments on time. So the secured credit card is the best way to start that out. Another way a lot of folks do this is becoming just an authorized user on a family member or friend's card that they already have established, and then they're making good on-time payments. So
how does that work?
Yeah, you can. So they would essentially add you as an authorized user. So you just give them your name and social. You want to make sure it's someone you trust, a family member
and vice
or
versa.
close friend.
Yeah, sure.
And they would put you on. You would get your own plastic card in your name. But the good thing is whatever is reporting on the credit is also going to mirror onto your credit. So if the owner of the card is, making on-time payments, you essentially as the authorized user can use the card. You're just not financially obligated to pay it back, but all of that good reporting is built up and that will transfer over onto your credit report. So a lot of folks like to start off that way as maybe your first credit card.
Sure.
So that way you can have, that on-time reporting. Right. And then the last way that is probably the easiest way once, you have a relationship with like a bank or credit union, you can get a small micro loan, something little like $500 to $1,000 where you would just take out that loan and then just make those on-time payments every month and pay that loan back. And then essentially that's going to start building up that credit score. And if all three of those options, don't work for you or you're trying to look for another alternative, a cool thing now is they have something that's called a credit boost. And what that is you bills that you're already paying on time, right? Your rent or your utility bills. You can actually request those bills to be reported on the credit bureau. And that will essentially start to give you a positive credit score. Just keep in mind that they will report if they're late too. So it's kind of like, you try to put a utility bill or something on there that every single month it's coming out of your bank account and it'll directly transfer onto that credit report for you. So, those three ways are the best ways to do that. I mean, I can remember when I first started, I was in college at MCC, and I had no idea at all about credit or how to even start out. And I was walking down the hallway, and there was a bunch of lenders with tables.
Yeah, I've been there.
Yeah, and they're like, "Oh, sign up for a credit card. You know, you get a student card."
Yes.
So I'm like, "Okay, yeah." So that's awesome. So I signed up for 2, and immediately
Wow.
I was like, "Okay, what am I going to do with this?"
Right.
I went and I charged all my books.
Yeah.
And I bought my books on it, and I essentially maxed out the cards,
Yeah.
and I was paying for my school books for years and years and
Bet,
years.
yes.
So just having these little tips and stuff, I think, would have been helpful for someone just
Absolutely.
starting out.
Yeah. I fell into that same situation, and I wish I knew then what I know now.
Yeah, exactly, right?
Yes, absolutely.
But I guess, the key is to start small,
yeah,
pay the bills on time,
Absolutely.
and then just build trust with the lenders. Yeah.
sure. So what factors go into your personal credit score, and why does it matter for entrepreneurs?
Yeah, so there's a lot of factors that go essentially in the credit score. I would say that the most important thing is the payment history.
Okay.
So that makes up 35% of the credit score. It tells a lender that you're paying the bills on time every month. It will report if you're over 30 days late. And then it gets into 60 and 90 days. So those on-time payments are really, really imperative to maintaining a good score. And one thing that I always recommend doing is, because the on-time payments are so important, you could set up like an automatic payment, even
Yes.
the minimum automatic payment,
Right.
to have that come right out of your checking account every month. So that way, at least you're hitting those minimums and you're never going to have a late reporting.
Yeah, absolutely.
The next thing that makes up the credit score is the credit utilization.
Okay.
So what I mean by that is the amount of debt that is owed on a revolving line of credit. So something like a credit card, for example, right? So let's say you have, $1,000 credit limit. They look at how much of that credit card is being utilized, and that is about 30% of your credit score. So a rule of thumb is keep 30% of that utilization on that card or less. So for the example of the $1,000, never have more than a balance of $300 a
Gotcha.
month.
Right.
Yeah, and just make sure that you kind of keep the debt lower than, the 30%, and you'll always be in a good spot to kind of maintain that good credit score or improve it. One thing that I think that is a myth that a lot of folks, and I learned this too the hard way, was, you can have a credit card and you can pay it off every single month, right? You pay the whole balance off.
Totally, yeah.
Yeah, pay the whole $1,000 every month. But what happens is that the amount of the card that's being utilized is actually reported when the statement is cut. So that might not be at the end of the month. It might be in the middle of the month. And so it'll show, if your balance is like $900, but at the end of the month you're going to pay it off, but that statement generated on the 15th, well, they're going to report on the 15th that $900 out of the $1,000 is being utilized. So just kind of look at your statement, keep that in the back of your mind. But I think it's important to just, if you're one of those folks that just pay it off every month, look at that statement cycle, because that can really affect the credit score, and make sure it's paid off before then.
Gotcha.
The next thing is the length of the credit history, right?
Okay.
So the longest trade line, and what I mean by trade line is, a credit card or a loan, the longest one that you have, you want to keep that open. You don't want to close that unless there's like an annual fee or something on that, but you want to keep that card open, because that's the start of your credit history. So like my cards that I got at MCC, years later, I still have them open. Yeah, because I don't want to close that trade line, because that's when my credit first established. So if you're thinking about closing a credit card, or I would just, ask the lender, what is reported when you close the credit card, if there's annual fees. If there's no annual fees on it, there's no harm, no foul. You can keep it open and just maybe, tuck it away.
Gotcha.
10% of the credit is based on like the credit mix, right? So what types of credit that you have. So you can have like a credit card, which is your revolving credit, right? Where you borrow and repay, or you can have an installment loan, and that's more of like your mortgage or your car payments, right? It's the same payment every month.
Right.
And so they're both measured on your credit report, but it's good to have like a mix of both, because that's how your the score can go up by measuring, because the credit bureau will measure how you can manage two different types of credit. So having a mix is always good. And sometimes that doesn't happen until later on in life when you do get a car, do get a mortgage.
Right.
But having a mix is essentially the 10%. And then one thing that I think that is important, is how many times people are checking your credit. So the inquiries that you're doing. So I remember back in the day, I would go to the mall and Macy's would give me a credit card, and Express and Victoria's Secret. And every time I asked for a credit card, that was like a hard inquiry on my score, which essentially brings your score down a little bit. So as a best practice, I would say, try not to apply for too many credit in 1 year. Try to keep that 2 inquiries or less. And essentially, you can check your credit score for free. That doesn't affect it. But whenever you're asking for credit and having a lender pull it is a hard hit on your score, which can temporarily bring it down a little bit.
So doing it yearly would actually be a better way to go about it?
Yeah, like twice a year. So plan out your year, especially if you're a business owner and okay, well, maybe I have to get a working capital line of credit. So that'll be my one hard inquiry. But then, we're going to refinance our mortgage at the end of the year. So that'll be my next one. And maybe you might want to save that credit card for the year later. Yeah. So just 2 a month or 2 a year would really be, the max of where you want to be with that.
Okay. What do lenders typically look for?
Yeah. So this question comes up a lot, the score is really, really important because it, like I said, it paints a picture for the lender. It depends on what type of credit that you're asking for. I would say if you're an entrepreneur looking for a small business loan, you really want to be in the realm of like 650 to 680 or higher. So a good credit score is essentially like the 670 mark or higher, up to 739. Above 740, you're considered very good.
Okay.
You would probably get a really good interest rate on a loan. You probably would not have trouble getting approved depending on what product you're looking for. And then over the 800, and this sometimes doesn't happen until way later on in life, but the 800 is really an excellent credit score. You're going to have the best interest rate, the best terms.
Awesome.
But most lenders look at the 680 or higher, but there are some programs that you can still qualify for less than perfect credit. And then we'll talk a little bit about how the SBA can help your chances of approval if you don't have perfect credit. So
okay, Jen, I want to ask you, how accurate is Credit Karma?
So Credit Karma is a good, it paints a good picture of where you are, but it's not your real credit report. So it's a third-party company that will report different, trade lines on, to your app, and it'll give you an idea. But when you go to the lender, they might have a totally different score. Okay. So the real accurate way to pull your credit, I would say, is directly from the 3 bureaus, Experian, TransUnion, Equifax, or you can go to annualcreditreport.com. That's a one-stop shop. You can pull all your credit reports and then see your score there. But yeah, Credit Karma it's a good guide, but it's not 100% your real true credit score.
Awesome. How does business credit differ from personal credit, and when does it start to matter?
Yeah, so good question. I get this a lot in my day-to-day. So personal credit is tied specifically to your Social Security number. Okay. As an individual, while the business credit is tied to what's called an EIN number, or your business identifying number. So at first, lenders, heavily weigh on the personal credit. They leverage that if the business hasn't really established any credit yet. So it's good to have a good track record with your personal credit, but as you grow as a business owner, you might have relationships with different vendors, or you might even build credit and get a small business credit card. And once you get there, that's really going to start establishing business credit that is completely separate from your personal credit. But essentially, it starts, at the early stages of business. It starts with your personal credit. So that's why it's, so important to have that foundation of trust with the personal credit. But essentially over time, as you build your financial resume, that could always improve. But once you have that foundation with establishing the business credit, then that's really when you can start getting those equipment loans or working capital lines of credit or things that'll help grow and expand your business.
Does your personal credit affect your business credit when you start?
Yeah, it does. Yeah, you want to have, a good personal credit, because if you're going into the business world and you're as an entrepreneur and you're looking for relationships with vendors, or like I said, a small business credit card, if you don't have a good personal credit, you might have to wait until, you're up to that level of, the 650, 680 credit score. But yeah, it really does affect your business credit. And business credit is calculated, essentially a couple different ways, but the main thing that you look at is your personal credit plus any business lines that you have, plus, your personal, payment history, and then sometimes even the industry or collateral that you might have for the loan. So everything combined is your business credit, and that is essentially what determines your eligibility for, an SBA loan.
Okay. What is an SBA, and what role does the SBA play in helping entrepreneurs secure financing?
Yeah, so we have an awesome program called the Small Business Administration. So it's a government agency in the U.S. that helps people start and grow their business. So the SBA doesn't give money directly, but what they do is they partner with banks or credit unions to make it easier for small business owners to get loans. So essentially, think of the SBA as like a helper or a guarantor on the loan. So they would guarantee a certain portion of that loan. God forbid, you default on the loan, the SBA will still pay the bank that guaranteed portion. So a lender feels a little bit more comfortable giving a loan to somebody that has maybe less than perfect credit or just starting out. And it's a way to really set a good foundation for entrepreneurs to have that business credit. So, the money they need to start up or expand or grow. And then essentially once you have that SBA payment history, that's establishing your business history. And then you could get another, a commercial mortgage later on in life, or another conventional loan, which is not backed by the SBA. But the SBA is wonderful because they help so many business owners get approved.
Yeah. If someone isn't ready to apply for an SBA loan today, what steps can they take to improve their personal credit?
The good thing about credit, I love credit so much because you can always go up, right? You can always improve. So if you're not there yet, I would say paying the bills on time is the most important thing. Even one late payment can really, really, drop your credit score even by like 100 points.
Wow.
Yeah. But just paying down revolving balances on your credit cards too, keeping those utilizations at 30% or less. And then, like I said before, avoid opening so many accounts. Only apply for credit that you need and not that you want. So instead of, getting that, Macy's credit card or Victoria's Secret credit card, just pay cash. Maybe get a coupon later on in the mail, but, hesitate from opening all that credit lines. And then I would say preserve your credit history. Look in your credit report and see the oldest credit card that you have, and just, make sure that stays open and you're not closing that trade line history. And then I think the most important factor, and you brought up Credit Karma, which is a good way to monitor credit, but also to, going on that annualcreditreport.com, because there's so many times I find inaccuracies on people's credit report, whether it's a debt that should have not been there or a name or address mismatch. And so it's really important to go on there every 4 months, so you can pull each credit bureau one time a year for free. So I kind of recommend staggering them out throughout the years. In January, pull one, a couple months later, pull another one. So that way you're always monitoring the credit and like reporting or disputing any inaccuracies.
Gotcha. How can entrepreneurs improve their chances of getting approved for an SBA financing?
Yeah, so it's a lot on that personal credit score. So just keeping that healthy, monitoring that before applying, making sure that any unresolved issues like disputes are settled. One thing too, we tell a lot of folks is like keeping your personal and business checking accounts separate. Like all of your business expenses should be in a separate checking account. All of your personal expenses should be in a separate checking account. So really make sure that things can be reported accurately and that you're aware of your expenses. Building a good relationship with your different vendors that making sure that you pay them on time. But I think one of the most important things that I can't stress enough is connecting with your bank or credit union, like having a good financial partner that can guide you and understand your business and really help you, financially. And, your banker can connect you with different credit tips or different agencies in the community that can help start your business and grow. But they're really a good resource to have. So just having a good relationship with a bank or credit union that has access to, local SBA offices.
Absolutely.
Yeah.
What entrepreneurs are most likely to succeed, men or women, and why?
Oh, goodness. Both.
Who has better credit?
Absolutely.
Who's likely to have better credit?
That's a trick question because I think everyone has an equal slate. So, yeah, I think, I think people have, as long as you have the knowledge and if you don't ask, you don't know what you don't know. Like when I was at MCC, I had no idea. I maxed out that credit card and no one told me anything. So I think if you don't know, the best thing is just ask, do research. Go on your bank's or credit union's website. Sometimes there's a lot of financial education out there, but just, be curious, I would say.
Sure. Well, men have a hard time asking for help.
That is true. That is true. But
so I would say women, but that's just my opinion.
maybe, okay. But yeah, I think either way, it's an exciting, opportunity for entrepreneurs. And I think that just being open and honest and asking questions and learning is, the first step. So.
Absolutely.
Awesome. Yeah.
Well, thank you, Jen, for joining us here on El Poder Latino. It's the Poder en Vivo. It's a podcast series that we just started out, and we're happy to have had you here on our show today. If you're watching or listening and there's something that you'd like to ask our good friends over at the M&T Bank, please feel free to leave a comment in the comment section. Please like the video and share it with someone who you think could get some use out of it. We certainly do appreciate your time, Jen. Thank you for joining us, and thank you for watching, and we will see you all very soon.
Awesome.